everyone, welcome to another episode of TOI Wallet Talks. The CBDT has released the new income tax filing forms for assessment year 2023-24. Today we have with us Shalini Jain. She's tax partner at EY India, and she's going to take us through what's new in these forms and what salaried and individual taxpayers should be looking out for. Hi Shalini.
Hi Smriti.
Hi. So, first up, what are the top changes that one should be aware of?
So Smriti, in the tax return forms for financial year 22-23, for which the due date for individual taxpayer is 31st July 23, there are three broad changes in the tax return forms. So the number of forms remain the same. For individuals, salaried individuals, ITR 1 and ITR 2 are the two relevant forms. So depending upon the residential status, the income streams, the individual has to decide which form to use. Now, three major changes which have been brought about by CBDT in the newly released forms. So the first change is with respect to reporting requirement of the virtual digital asset. So there was a taxability provision which was inserted, and in line with that, there is a schedule which is notified for the virtual digital asset. And I'm going to talk about all of these in detail. The second change is with respect to the overseas retirement account, where this provision was brought in last year, but there are certain changes in the schedule for reporting income from the overseas retirement account. The third change is in the schedule for TCS, tax collected at source. So, for example, when a person buys, say, a car or is, remitting money through, through LRS through overseas, there is a tax which is collected at source. Now, there is a change in that form where, in case the individual is claiming credit for taxes collected at source under, say, spouse's PAN, that provision has been provided in the income tax return form. So broadly, these are the three changes. Now coming to the reporting requirement for virtual digital assets referred to as VDA. Now the provisions for taxing income arising from transfer of VDA, this was introduced by the Finance Act 2022, and it provides for taxing income arising for transfer of VDA at 30%, where income is computed by reducing only the cost of acquisition. So a new schedule has been introduced in the tax return form, which requires the taxpayer to report the date of acquisition of VDA, the cost of acquisition, the date of transfer, and the head under which the income is being offered. The income can be offered either under business income or capital gain, but for individuals, salaried individuals, it would be capital gain which would be relevant. And then what is the consideration which is received for transfer of that VDA? So this is in a specified schedule. There are corresponding changes which have been made under schedules which are relating to capital gains and income with special rates of taxes also, in order to incorporate and report the income from transfer of VDA. On the requirement to report income on which from the overseas retirement benefit account. Now, the provisions of income tax law, it provides for taxation of income from overseas retirement funds basis the income tax rules, and there are detailed rules around that. And the tax deferral provisions are applicable only to resident individuals taxpayers and not to non-resident taxpayers. The tax return forms for tax year provide for reporting of income earned in the retirement benefit account maintained in a notified country separately and other than notified countries separately, as well as reporting of quarterly breakup of income earned in such retirement benefit account. So the notified countries are US, UK, Canada, and notified countries are the rest of the countries. So this is typically applicable for any expats who come to work in India and who have these overseas retirement benefit account. Now the new tax return forms now includes a specific row under the head salary and also under income from other sources, and this is basically for disclosing income from such overseas retirement benefit account in respect of which relief was claimed in the past years. And this amendment is basically pursuant to the clawback provisions of the income tax laws, which provide that income from overseas retirement benefit account on which tax relief is claimed in the past years will become taxable in the year in which the individual becomes a non-resident. So the third change is in the TCS schedule, tax collected at source. The new tax return form has modified this schedule, which enables taxpayer to claim credit for tax collected at source. The schedule has been modified to furnish TCS credit related to other person, permanent account number of other person whose TCS is being claimed, and TCS of other person pertaining to current tax year and claimed in the current year.
Okay. Thanks, Shalini. And as a follow-up to that, the CBDT has released the forms early this year, so the taxpayers actually have time to look at the forms and go through them. So, what are the top income tax filing mistakes that they should look to avoid?
One needs to be, first be mindful of what are the income streams. I think what we very often forget is that if we have invested, say, in any mutual fund, or if we have invested in any shares, and while salary is very easy to capture because we get a Form 16 from the employer. So one of the common mistakes is not disclosing all the income. So for that, now it is very easy. There is a mechanism, one can download their Form 26AS, which captures the income and the taxes deducted at source if the income has the deduction of tax, or AIS, annual information statement, or TIS can also be downloaded, basis the PAN number. Then also look at all your deductions. Sometimes you may have made investments. So typically, supposing if you made a donation which is eligible for a deduction under ATG, you may not have given, those details to your employer, because employer would typically not allow you a deduction under ATG. So please be mindful that ensure that you have collected all the details of your deductions. One of the tip I would want to give to all individual taxpayers is the best way to file your tax return correctly is to scrutinize your bank statements. Look at your debits and credits, which will also help you understand or recollect if you've had any income stream, or if you've made any payments, expenses, investments. I think easier to capture. So I think broadly, tally all your Form 26AS, your Form 16s, Form 16As, AIS, TIS. If you do all of this, I think you will be able to file your tax return correctly.